Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us remotely, we have Kevin McPartland. He's the head of market structure and technology research over at Greenwich Associates. We're going to take a look at how trading platforms and exchanges have held up with elevated trading volumes. Kevin, it's great to have you with me as always. Certainly looking forward to getting you back in studio. When we return to our old normal, fixed income markets certainly have seen elevated volumes just like all the other asset classes.
Yeah, thanks, Jill. Thanks for having me. It's really been an incredible couple of weeks on so many fronts. But yeah, if we look particularly at the bond markets, volumes have just been amazing. We've seen sort of weeks with U.S. Treasury trading over $1 trillion a day, right? And that compares to sort of normal times, if we'll call them that, trading between 500 and 600 billion a day. So almost 100% increase in some cases is really just amazing. Futures markets, although they've calmed down in the last sort of week or so, have also hit some pretty amazing peaks with Treasury futures, sort of the entire complex trading almost 25 million contracts in a day, which is up from about 5 million on an average day. So it's really amazing. And I think what's notable, and to the point about your opening, is that the markets really have held up well, right? I know there's been, a lot of issues around liquidity. Obviously, the Fed wouldn't have gotten involved if there wasn't. However, the market infrastructure, the ability for folks to sort of post bids and offers, to trade for investors, the amount of data that's been being pumped through the system, there have been no major outages, at least not that we're aware of, which I think is really an impressive feat for all of the exchanges and trading venues that are out there.
Yeah, I would certainly agree. And let's take a look at our first chart here. Here you're looking at U.S. Treasury volume. What are some things that are sticking out to you?
Yeah, I mean, the chart really does speak for itself, right? You can see how quickly volumes ramped up there. We're interested to see, right, in a couple of days, we'll have the full month of March, which will allow us to really look closely at exactly what's happened. But, like I said, if we're averaging about $1 trillion a day, again, pretty incredible. The platforms, that's another interesting tidbit, right? As we think, it's a bit anecdotal. We'll have real data soon, but that in sort of a decade or so ago, when there were times of stress, electronic trading would back off. People would go resort to the phone. They wanted to talk to somebody. It seems now we're at a point where that's the opposite. Electronic trading actually increases because it can be hard to get someone on the phone when markets are so volatile. So trading on the screen is the most efficient way forward.
All right, and if you look at our final chart here, you're looking at futures. Is this any different than what you're seeing with the chart we looked at previously?
Yeah, so it looks like for futures, it peaked early, right? There was a lot of early hedging that was going on in late February, right as this was really kicking off. People were trying to get a feel for what was going on and effectively either placing their bets or putting their hedges in place as sort of markets move quickly. And then we saw, right, obviously through March as the yields on like 10-year treasuries, as a for instance, really just dropped like nobody would have ever expected. So derivatives markets have cooled a little bit, but nevertheless, I think it does point to how important derivatives markets are to the market, both swaps and futures, from a risk management perspective, even from a speculative perspective, right? Because the liquidity that the speculators provide, for lack of a better way to call them, is really important for those that are looking to manage risk or hedge their existing positions. And that's another case, right? There have been sort of two known issues with the defaulting customers in futures markets. But in both cases, the clearinghouses, the procedures they had in place handled them exactly as expected, right? So those unwinds worked quite well. So, not good for those firms, but a good sort of proof that the system that was put in place, a lot of it, coming after the financial crisis in 2008, really did work and do what it was supposed to do.
Yeah, and it's interesting that you say that because hindsight being 2020, of course, it's almost a good thing that we went through 2008, 2009 for these systems to be put in place to protect the industry and investors going forward. With banks, for example, let's say banks weren't as well capitalized as they are now due to the regulations that came out of the great, recession back in 2008, 2009. Could you only imagine if the banks weren't as well structured as they are now with everything else going on?
I couldn't agree more, right? The extra amount of sort of capital cushion that the banks have in place been a tremendous help, and that and that's why this is definitely a very different crisis than we saw in 2008. And sure, there, like I said before, there have been, places where liquidity has sort of been weak, and I think in a few small instances really has felt like it dried up. But that, that's not due to any sort of cracks in the system or the structure, or the banks for that matter. It's really, those are sort of true economic issues where there are concerns about sort of whole industries because demand and supply have gone away for sort of in the real world. So this isn't a financial markets problem. The markets are certainly reacting to what's happening in the real world, but I couldn't agree more. The banks, the clearing mechanisms that were put in place, the capital rules that were put in place, it does seem to a large extent they have worked. Although I think we should expect coming out of this, there will certainly be a re-examination again of the whole system. What worked, what didn't work, where can we sort of make improvements? But yeah, it is interesting silver lining of 2008. Now that we're looking back 12 years later, that a lot of those changes did help quite a bit.
All right, Kevin, as always, thanks so much for joining us on Trade Talks.
Thanks so much for having me, Jill.
All right, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.